Good afternoon. I'm Brent Wilsey with Ms. Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we got one of my favorite reports. I always talk about this, the JOLTS report, which stands for Job Opening Labor Turnover Survey. The numbers came out, and they came out strong today. Now, look at this. Job openings set a record 5.87 million jobs. This is pretty incredible. An increase of job openings of 4%, but a slight problem here, only a 1% increase in hirings. Now, what this is telling me is that we're having trouble now finding qualified workers. This could be a problem going forward. We do see total hiring 5.22 million people. Very good report so far.
Yeah, speaking about finding those quality employees, a lot of times you can see this in the quits rate, and that actually remained unchanged at 2.1%. And what this could mean is these job openings, the employers could raise the potential salaries for the employees to attract that higher quality talent, which could mean wage inflation, which brings us to the big question. What does this mean for the Fed?
And you pointed out, hit the nail on the head. I think we're going to have wage inflation because when you can't find the employee, it's going to raise the wages, going to get people to move. The Fed, if they're going to see this report, I think they're going to raise in September. I know I'm the minority on that, but I think in September we're going to see a small raise.
I mean, there have been some questions of, are there politics involving? We know we have the big election coming up in November, but we did see two Fed members come out today, and Williams, who said, I think we're ready, I think the data is strong, and also Lacker said, I think these numbers present a strong case for September. So very curious to see what happens there. A lot of economists are saying traders are actually underpricing the effect of a rate hike in September. So keep an eye out for that.
That's going to come up pretty soon. What is it, 2 weeks away, right?
Coming up, yeah.
2 weeks, all right. Coming today is Verizon Communications, current price $53.63, the high $56.95, the low $42.20. I did notice on this chart back in 2013, not much growth from there, so it seems to be a little bit pricey. Let's take a look at the numbers here for you and talk about Verizon Communications. Everybody buys a stock because of the great dividend, 4.3%. Their payout ratio from their earnings, 63.8%. But look at these numbers here. Sales only up 0.88. Earnings per share did climb by 46.6. I think that's due to an accounting things that they're kind of doing. And price to tangible book, not material. So they've got a bad balance sheet here, I'm going to call it.
That kicks off the troublesome area for them, as you said, the balance sheet.
I just saw the debt. Wow.
Debt to equity, 518.2%. Long-term debt to equity, 482.9%. Look at the current ratio, 0.61. Now, what this tells me, talking about the Fed increasing rates, is they may have to finance some more debt when they come down to pay off that short-term debt because they don't have the cash to pay it off. So if rates are going up, their interest expense will be going up, hurting their bottom line. So definitely something to keep an eye out for. And again, this is insurmountable. That's just astonishing that they carry that much debt on the balance sheet. The earnings, however, do look okay going forward to December 2017. Estimated earnings per share $4.04. Gives a target sell price of $66.66, but that debt just would not warrant a buy for us at all.
Yeah, and I would say check the SEC filings to find out what that debt is made up of because it just seems very strange. It scares me quite a bit.
Well, we also talked about, too, that maybe there was something about leasing the phones. That could be there. So if that is the case, you just really have to understand what's going on. This is just on the surface.
Exactly. All right, well, I hope you enjoyed this edition of the Smart Investing Daily Briefing. If you'd like to find out how to get a free copy of the great investment book by Warren Buffett, The Warren Buffett Way,
give us a call at the office. Our phone number is 858-546-4306, or you can contact us at our website, smartinvesting2000.com.